Hi, good morning everybody. This is Nicholas Teo from CMC Markets here in Singapore. Today, the 11th of August, 9:47 in the morning. Quite a few things happening right off the bat this morning. First things first, at 9:30 or rather 8 o'clock this morning, almost a couple of hours ago, Singapore announced their second quarter GDP. The numbers came in at a 1.8% year-on-year number against forecasts of a 1.6% growth. Also, on a quarter basis, Singapore announced a contraction of up to 4% of their second quarter GDP versus the first quarter this year. This compares against a 4.6% contraction that the market was expected. So clearly, these are better numbers than expected. And right off the bat, we saw a little bit of a bounce where the dollar Sing is concerned. Or rather a pullback where the dollar Sing was concerned. Now if I were to pull out the dollar Sing here on the charts, now this came in very early in the morning. This pullback came in very early in the morning, and this was on the back of this number earlier on at 8 a.m. this morning. Okay, we saw a pullback, but since that time we've seen this big spike up once more. So clearly a couple of reasons possibly for that. Now one, this better than expected number saw bulls for this currency pair decided to actually pull back in the position and sell down, and this is on the back of this big move that we've seen since the middle of June, from around the 132 133 level all the way to a high last week of 139. But subsequently, that move up down here clearly shows that while the number was a bit better than expected, the outlook for the outlook pointed by the MTI, which is the Ministry of Trade and Industry, suggests that they have actually narrowed their band for the forecast for the full year of this year, narrowing the band from a 2 to 4% range to a 2 to 2.5% range. So clearly highlighting that there are a lot of dark clouds that still remain. Now this basically has given the bulls for this currency to actually continue to push up. There's also an influence from the US dollar side of things, but clearly the environment, or the weak environment for the Sing dollar, will continue to remain present, and with that we could see that impact some of the other key equities in the market, in particular some of the banks that I've highlighted actually in today's morning report. Banks on the onset saw a little bit of a sell down, namely led by DBS Bank and UOB down here. Last week we wrote a note about a possible or potential pair trade on the two banks, DBS and UOB. Please refer to that note dated the 4th of August, calling for perhaps a taking advantage of that spread that has actually widened. Now another piece of news that has come out overnight was obviously Noble's results. Noble announced last night a reduction or profits fall, but I think what was key in the announcements accompanying the result announcement was the fact that they received some sort of endorsement from PwC. PwC auditors, independent auditors that Noble has hired when they received quite a bit of flack, stating that their original auditors, Ernst & Young or EY, that has been there for the last 20 years or so, may not have offered a unbiased view. But PwC came out and endorsed their numbers to be compliant of international accounting standards. So we saw a little bit of a rebound on the stock this morning. Now another reason that contributed to this rebound was statements that Noble's management made, representing that they've hired Michael Klein. Michael Klein is one of the deal makers that have been involved or partly responsible for some of the big deals we've seen in the commodity front. Noble basically released a blanket statement that suggests that that the deal may be offering, although not imminent. They've hired Michael Klein to actually come up with certain recommendations that could be, in regards to perhaps financing by key banks and or a stake sale or a sale of the company. Now nothing has been actually confirmed, but the fact that they've actually taken that step to approach investment bankers to actually come up with some sort of a restructuring or some sort of solution, clearly sets the pulse racing where short covering is concerned. It has been actually made known that over the course of the last week, during this rebound here, as we flag down here, we've also seen the increased short selling position. So those statements over the last 2 days or so clearly suggest that we may see a continued short covering come through to the stock down here. A possible target would be around this sort of levels, which is also the 50-day moving average for the stock. And also representing this low, which is around 67.5 level. Alternatively, if we see the stock pulling back and closing below this breakup line of 63, we could see it being tested once more at this level, which is the 61.5 level, which offers a little bit of support, at least where this stock is concerned in the near future. Other things I just want to quickly highlight is that over the last 2-3 days we saw a huge rebound on the price of soya bean. Soya bean is now well above 1,000. Well, not well above. It's above $1,000 at 1,020 in this early trade. This two big days of green candles, okay, propelled this commodity back up. Now it came a lot. In accordance with some of the big rebounds we've seen in commodity prices overall, but early last week or late last week we talked about soya bean as a potential trade, purely because of the El Nino factor. Fundamentally it looks good, technically it also looks to be well supported, but also I just want to remind everybody that you will also be receiving a potential 20% carry on the product going into this commodity. Finally, just to flag one last thing, this morning we're seeing Japan 225 touching its almost 20-year high here. It's going to be important to see where the next candle is, the next 2-3 days or so, whether we will pull back like we have seen in here and here, or this thing is going to punch through. If it does punch through, we're going to see good momentum, bring it through to a new territory, at least for the next 20 years or so. But it's something that we've always liked, the Nikkei Japan story, and we've talked about this in several YouTubes before, and definitely most of the seminars that we've had. So it is a story which continues to unfold, and please follow this. Thank you very much.